Happy Sunday, everyone, and welcome to another Sunday Q&A. We're going to be doing things a little bit differently this Sunday, where I went ahead and allowed members to gather their questions up so we can have this one recorded and uploaded for members that can't make it due to Mother's Day. Now, the first question, we're going to go ahead and get started so this video isn't too long, is how to identify momentum instead of fakeouts. Now, this is where the utilization of moving averages comes into play. For example, if we had off the open here, broke out on Tesla, broke out over our key 669 level and got rejected at the 200 MA, we wouldn't long right here. So we would give the open about 15 minutes approximately to identify if the movement is faked out or not. And if it go ahead and gets rejected off of the 200 MA, we can go again, look back at a retest of a low volume pullback at the 669, where we see now this 200 MA is flattening, of course, because we broke out. So again, we would see a retest about over this 50 MA where the key 669 level is, and test over the 200 MA again. So utilization of the 200 MA key on all time frames to identify if the breakout is going to hold or not, because usually that's where rejection would occur, more specifically on the 15-minute time frame. Let's go ahead and take a look at it if we can. Now, I know Weeble is a little bit tricky, so you'd have to, there we go, daily over here, and now we can take a look at the 15-minute, and it would be this one right here. Again, we could see that we started getting some congestion around the 200 MA, but ever since we claimed over that, we continued to move even higher than so. So always be on the lookout for your 200 MA. Next question. I see the alert on XYZ stock. What do I do next? Quick example. Over 2 minutes just to see on the Q&A session. Thanks. I'm assuming you're asking, let's say a stock broke out, and how many minutes are you giving it to confirm its breakout? Again, this is explained in my educational info. You want to be looking at the volume to identify if the breakout is sustained. That way you don't miss any significant point movements off of those 2 minutes you're talking about. And you can always look for retests if you're not sure on the initial break or you're a little bit hesitant. Always retests are your friend. Next question. Which indicators are best for identifying breakouts and breakdowns? I have 50, 100, and 200 MA. Do you just use the one closest to the price? And which minute chart is the best? I assume 5 minutes. Is there ever a scenario where 5 minutes is not the best? Yes, of course. So for breakouts intraday, the time frame that is best is actually the 15-minute, because if we broke out on the 15-minute time frame, especially over the moving averages, then we solidified the breakout as it's now occurring over a larger candlestick time frame. Of course, we can have breakouts on the 5-minute, come back to a retest and fail, but the 15-minute allows for the candlestick to get that retest, and after it's fully closed and printed, you can get a gauge off of direction. As for best moving averages, I would say the core ones are the 50 and the 200. The 200 is usually used as a place of tough support or tough resistance, and the 50 is usually where you want to start looking at for potential breakouts. And you can use the 20 as well for identifying continuation as well. We can get more into that in future videos. How do you play the opening and not get reversed? Again, if you can identify momentum and volume, then go ahead and play the opening. Otherwise, if you're a little bit unsure of the opening and you're scared of reversals, just go ahead and wait the first 30 minutes. That way, all the retests are out of the way, all the reversals are out of the way, and you can get a better gauge for direction, especially with the volatility on open. How do I know it is a good time to re-enter trigger? Last Friday had multiple scalps, but there were days it would just tank. And of course, that's correct. And that's where we are gauging price action and candlestick reading. Of course, all these questions, well, not all of these questions, majority of these questions can be answered if you just take a look at the educational info. There are candlestick readings out by our very own Controlled Trades in the FAQ. I linked his channel. But essentially, the point of retests where you can re-enter a trigger is all about the volume of the pullback. Now, if we see a high volume pullback, that's usually an indicator of the trigger is probably going to fail, or that pullback is happening off of strong selling pressure, right? So if we see a low volume pullback, that's generally the ones to look at for holding that key level. And then we can, of course, use the 5-minute time frame to see if that key level held. How do you decide whether to stay in a trade or get out? I'm going to save that question for a script I'm putting out actually for members that uses EMA clouds in order to give you an answer whether you should either, one, keep holding because the clouds are still holding, or two, the move is invalidated as it is now puncturing key EMAs. Next question here we have, I overslept and missed the morning alerts. Is there a way to catch up? The market doesn't wait for everyone. If you're not going to wake up on time and be attentive, then you're going to have lots of triggers pass up on you, and that's just the way it is. Please explain how to be quick and not dead. I assume you buy, sell, market on your phone with hotkeys. No, I don't use any hotkeys, and I don't utilize market buys and sells much as you think. Those I save for more momentum-based triggers that are happening intraday, not so much at the open. Utilize your limit buys. You can always be quick, as in slap the ask on the limit buy if the spread is tight. And most importantly, this is how you be quick and not be dead on the sells. You want to utilize limit sells. I know all these traders put, including me, what the max contract it ran to, but human error is in there, human behavior is in there. You're not going to get all the way to the max profit. So utilize limit sells and put maybe 30%, 50%, something along those lines. And you can, oh my God.